no business, can remain in business if you're only selling half of what you produce each month. So, obviously these statistics are not genuine in some respect. And so, when I look at those numbers and I try to rationalize it, and I ask myself the question, what is the one type of housing unit which a construction company would not need to sell in order to be paid for? And the answer to that question is a prison cell. So, for me, when I look at that U.S. housing sector, it's still in the midst of a complete depression, by any measure of all the other stats. And then you see this supposed, somewhat rebound in housing construction, but units that aren't being sold, then I ask myself, what are these construction companies building? And like I say, the only answer I can come up with is, one private prison after another, one detention center to house the serfs that, either fall afoul of the government's political leanings, or else they simply are debtors who are warehoused in these facilities and used as slave labor.
And getting back to the second part of my question, which is, do you think that this thing can be stitched together in any way? The derivatives Ponzi is now imploding, and the system's coming down, isn't it? Or is it savable on some level? Say they re-implement Glass-Steagall. Is there any way to stitch this thing together?
Well, there's sort of two ways to answer that. I mean, there's first of all the general consensus that's emerging amongst, all mainstream commentators. It's not myself. It's not even just the people you referred to. It's basically a lot of very sharp people who are saying the same thing, and that's, nothing at all has been fixed in any respect whatsoever. It's simply been applying, one Band-Aid after another and one leaky Band-Aid after another. It's not even that these Band-Aids have been, slowing down the deterioration in any measurable rate. They've merely been obscuring the deterioration enough that the sheep are still unaware of how rapidly things are falling apart. And, so we have that, consensus aspect of things. But then there's just simply the numbers themselves. And like I say, you look at the numbers and you see that there's no reversal of these downtrends. And there's not even really much of a decrease in the rate of decline, and of course austerity, this sadistic stomping of the common people by cutting off spending to economies that are already starved for capital. All this has been doing with economies like Greece and Spain and the UK is actually increasing their rate of collapse. And so when the supposed prescription for these economic ills that's currently in vogue accelerates the rate of collapse, you don't have to be an Einstein to say, collapse is inevitable and it's coming soon.
Yeah, I'm afraid it is. And, for those of us that love our families and love our way of life in this country, sure, we have a government that's out of control in the United States. It's fascist. We have wars without end. We're dropping bombs on men, women, and children all over the planet. And those are the despicable things that, folks like me and you and others speak out against every day. We've got our First Amendment right to do that, and it's the the right thing to do, is to try to take our government back peacefully.
This is something that I don't think we've ever gotten into as a sort of a specific topic, which is the whole thing of this oligopoly-controlled global economy. And ultimately, we talk about fixing things and what needs to be done in that, but sort of the ultimate prerequisite before anything can be fixed is to smash the monopolies and the oligopolies, because as long as they're that big, they have far too much financial resources, and as long as they have these grossly excessive financial resources, they can buy governments. And so until the oligopolies and monopolies are smashed, we can never dismantle the fascism, because it's that, those massive accumulations of wealth which are what make this whole system possible. And so, if you want to get into that as a specific topic sometime, I think it's really important, and it's something that I don't think has been covered. And, it's like I say, it's just so fundamental, because, of course, in any economics, textbook, by I don't know if it's first year or second year, you get into how, there's nothing worse in the world than monopolies and oligopolies. They're entirely parasitic. They do nothing but damage, blah, blah, blah. And yet we have this world full of economic experts that, pretend they've never heard a bad word about an oligopoly. So I mean, this massive blind spot, it just amazes me.
Yeah, no, you're right. It's this vampire squid on the face of humanity, as Matt Taibbi has called it in relation to Goldman Sachs. But Goldman Sachs is just one arm of the oligopoly, as you call it. Now, for those who have heard us pounding the table, telling people that it's smart to buy some physical silver and to buy some physical gold while you can. What would you say to those people out there who either haven't, or to those who have and feel really disheartened because the price has gone from 48 down here to the mid-20s, and it sat in the mid-20s for a very long time? What would you say to those people?
There's, again, a number of ways to respond to this. The general technical argument is that this is what is called building a base. With any market, when you see a long period of sideways consolidation, and of course this is generally referring to markets where there are still supportive fundamentals. When you see this sideways period of consolidation, what a lot of experienced market analysts will tell you is that the longer you see that sideways period go, the higher the following bounce that will occur during the next rally. So that's one way to look at it. The next way to look at it is simply that this period of sideways trading, while the bankers continue to dilute their currencies and thus make all hard assets more valuable, literally means that gold and silver have become steadily more undervalued day by day as this sideways period has gone along. And then, on top of that, as we've just been discussing, a lot of people are expecting, some very severe economic fallout in the very near future. So, we put all these things together, and then, of course, we're just about, to hit September, which is the normal strong seasonal starting point for the bullion market. And, so there's a lot of people within the sector now who are starting to get very excited, expecting a big rally to be coming. And here, of course, is where I always want to warn readers. Never be gamblers. Never try to anticipate the market. Never say, aha, now I'm going to make a big bet on gold or silver because I know it's going to go up. Because the one thing we know about these bankers is they love to launch ambushes on the market. And, of course, the best time to do so is when they have everybody leaning and guessing in one way. And so my advice to people is, think simple. Think dollar cost averaging, putting a certain amount every month or every 2 or 3 months into gold and silver. Dollar cost averaging will not get you the best possible prices for your bullion, but it ensures that you're never caught, buying at any sort of a short-term top, where you're not getting best value for your money. So, I would suggest to people to be buying regularly, but to buy conservatively, and then to expect better days in this sector in the very near future.
Yeah, I 100% agree with you, Jeff. Dollar cost averaging is key. It's what I've always said for all of the years I've been doing this. Dollar cost average, never make an all-in bet. But more importantly, for those who are really feeling disheartened, and I get emails from folks, fairly frequently, asking me about this. The bottom line is we know that the dollar paradigm is on its last breath. It's not going to be around for another 40 years. It's probably not going to be around for another 10. More than likely, it's going down in the next several. And physical precious metals are the opposite of that. It's the opposite play. It's the contrarian play to those who love the dollar and see the dollar as some sort of shelter. So the bottom line, Jeff, is dollar cost averaging into physical precious metals is one way to assure that this banking cabal can't steal everything you've got. They might be able to take your 401k and your IRA and any paper assets. They might be able to take your house. But in physical form, precious metals provide you financial sovereignty. And be your own central bank, right, Jeff?
Be your own central bank, and as they like to say over at SilverGoldBull, build your wealth in ounces.
Well, Jeff Nielson, one of our favorite pundits in the precious metals space. Thanks for your time. And before we let you go, tell people how they can find you and read your great work. Where do they find you now?
Well, I started off with my site BullionBullsCanada, which I run with a couple of partners. But now I've also been brought into SilverGoldBull as their senior precious metals analyst, and I also publish a blog there now. So you can reach me at either BullionBullsCanada.com or SilverGoldBull.com on their blog.
Okay, Jeff. Well, thanks for joining us, and we'll talk to you again soon.
Always fun chatting.
All right, bye-bye.
Bye-bye.
Well, that's it, guys. Much more to come. Thanks for tuning in. And visit sgtreport.com for all the latest.